Now in this video, I'm going to go through very important concepts. I'm going to go through imbalances, I'm going to go through structure, and I'm going to go through what are some of the indicators you should be looking out for in order to take a confident trade. So once you're able to practice enough, you are able to identify all these imbalances, and that's what we do in the Discord server, right? We just identify all the imbalances here. And once you're able to do that, you can always log in, look at the charts, and know when you're going to enter, take your profits, call it a day. Now you just need 2 to 3 good trades in a day and you can call it a day, make a few $1,000s, few $100s if you want, as long as you can break the code of where the charts are going to move. Once you're able to see where the charts are going to move, you just need half a point, 1 point. This is enough for you to take enough profits for the day. So I'm going to use my thought process when I was live trading in the Discord server, and I guarantee you, if you watch this will improve your trading immediately. First things first, before we start trading in the day, we need to have market context, and this is why we have our daily brief that is released every single day before 7 a.m. Eastern time, is to help us understand the market context so that we can try to isolate our trades within a smaller range. So I am going to use 28th of July as an example of a trade. When we enter into a trading floor, we need to understand price action and structure. That's how we are going to be taking confident trades. Now at 9:38, when we saw this pattern right here, now we were able to see something like this quite early on, right? The first things first, we noticed that there was some form of resistance. Now, the resistance has not touched 402 pink yet, but we know that this could be the possible top of the range. So we identified this as the top of the range, and that's actually quite important because we then can therefore treat this as a secondary stop if we are intending to take puts here, which we did because I noticed that there was some form of resistance. How would you see that? Now, you notice that there are 6 1-minute candle charts. Now you can see the time frame here. This is a 1-minute candle here. So we can see that within 5 1-minute candles that we had some form of rejection of this area here. And we see that the buyers are diminishing, right? We're lowering volume and they are buying at a higher price. Now this always happens, right? I always call this the ascending wedge pattern, and this forms an imbalance and it pushes us down. You see the price imbalance brings the price structure all the way down, and we had our first good trade here. Now I'm going to explain the concept of an imbalance. Now we must not forget that when we are at the trading floor, when we are looking at the charts, the reason the chart moves is because of buying and selling. Very simply, if the chart is at this level here, for example, it just means that there is a buyer and there is a seller that's willing to buy and sell at 402.77 at this point here. So there was a willing buyer and there was a willing seller. Now, when we understand this concept, we must remember all buyers want to buy at a lower price and all sellers want to sell at a higher price. Now, because of this incentive and motivation, we will see movements in the charts. So when we look at price action like this, we can identify the imbalance that will move the charts. Let me explain. Now we have a very strong resistance here, and this is 402.77. Now at this point, we see that sellers are willing to sell at this price and they are holding at this price. In fact, they're not even looking to sell at a higher price. We have quite a large number of sellers that are looking to sell at this price. However, you notice that the chart is heading up. Buyers are buying at a more expensive price. Now, as I mentioned, if I'm a buyer, I want to buy it at a lower price as possible. Now, if you notice that the buyers are buying at a higher price, what's your natural assumption? That will the buying volume go up or go down. Now, because they are buying at a higher price, you can naturally assume that the buying volume is going to decrease. So you take a look at a volume profile like this, and you notice, yes, the volume is actually headed down. Now, because this is an early candle play, you have to be very careful of volume spikes as well. In terms of economic principles, if a buyer is buying at a higher price, you can naturally assume that the buyers are diminishing in terms of their volume. And once they're not able to buy at this price anymore, they're only able to buy at this price. They have no choice, so they will start buying at a higher price, and they will start buying at a higher price until it gets too expensive for them to be buying anymore, and they will stop buying altogether. And this is why you see patterns like this. This is a diminishing bias. So if I were a buyer and I previously bought it at this price, and sellers stop selling it so cheaply, sellers are selling at this price now, sellers are selling at this price now, would you wait for the chart to head down here before you start buying again? Absolutely, right? So the sellers are holding this resistance, and that helps to see things much clearer. So we know that the sellers are selling at this price level. And once it comes to a point that there just isn't enough buyers anymore, where do you think the chart is going to be heading to? The chart is certainly going to head down because of an imbalance that's created here. Now there are more sellers here than there are buyers, because all the buyers has been exhausted from here on. No more buyers available. This is why you see diminishing buyers here. Now, when that happens, you see the chart headed down. And you need to see the initial structure here. And I always look at it in terms as much as possible using horizontal lines, because this is exactly how the chart is like, right? It is based on price level. So if you have horizontal lines like this, you know that there are a lot of buyers at this level. And this is why you see some flagging here, right? And that should be your first profit target. So when I see the structure like this, I see that buyers are diminishing. You confirm with a lack of volume. You see that this resistance is holding well. Now, what can you assume? You can assume that sellers will start selling up to at least this level. And this is where I would take my first profit target. Now, because you have a strong resistance level here, you can place your stop loss very clearly. Now, because of market context, I can also set a secondary stop loss just in case there is a stop hunt, and we've seen that in the previous video, and therefore it forms this imbalance here. Now, once again, what's imbalance? When there are more sellers than buyers, what's going to happen? The chart is going to head down. When there are more buyers than sellers, the chart is going to head up. So in this case, there are more sellers than buyers, because you notice when buyers have to buy at a higher price, what's the natural assumption economically? You have to assume that the buyers will start diminishing, and because there is a strong pool of sellers here at this price, they will have to find some sort of balance. Now, where would be the first point where they find balance? Now, it would be at the lowest point where the buyers were willing to buy. This was your last known point where the buyers were willing to buy, right? So you can naturally assume that you're going to meet some sort of support here, because this was the lower price. Now, when we reach this area, you need to see the sellers follow up. Now, in trading, it's really simple. You just have to assume the identity of a seller and a buyer. And always remember, buyers just want to buy at a lower price as much as possible, and sellers want to sell at a higher price as much as possible. That's just basic economics. So when we come to this point here, now you have at least your first profit target here, because you know that there may be some buyers here from this level down onwards, because this was your last known lowest price of where the buyers were willing to buy. So any lower, you can expect there will be some buyers. But remember, in trading, we're also being fueled by some sort of momentum. Now, if I start selling like this, and the sellers see the trend of selling. So if I see some sort of imbalance like this that's forming, right? And I'm a seller. I was willing to sell at this price, but now because of this imbalance, the chart has came down to this level. Now I'll be worried as a seller. Now I was willing to sell at 402.77, but now this has happened and now I'm at 401.80. I'm worried. I'm worried that I can no longer sell at this price. So I'm going to rush to sell at a lower price as much as possible. So this phase 2 here, after taking your first profit target, you're trying to see if the sellers follow up where there is a momentum. So when you see sellers trying to follow up, there are a few ways to see it. The first, you see there is an increase in volume. Now, this just means that the sellers are panicking in a way. Right, I am no longer able to sell at this price for 0277. The chart has headed down, yet it's not come back up. So if I'm a seller and I want to offload my position, I'll start to worry. So when it reaches this price here and you realize that there is not many buyers, what would you do as a seller? You will start selling off. Right, you don't mind selling at this price now because you know you'll probably not come back to this for some time and you want to offload your position. And this is why we have sellers following up from the break of the structure. So when we look at trades, the first thing that I'm always looking out for will be in terms of a structure imbalance. Now that's always the first. Now structure imbalance will always economically be a guarantee unless big money comes in with a big volume spike. And this is why when you trade SPY, you have to take a look at low volume days, because in a low volume day, big money can push you out of this structure. Just by taking maybe a few $100 million, they can push the charts up. But it takes a few $100 million. It's not easy. So it's not all the time there is manipulation. So most of the time, I would say maybe 85% of the time or 90% of the time, SPY follows some sort of structure like this. So when you see this, there is imbalance. And the next thing you want to see after imbalance will be to see a follow-up. Now, follow-up is very important, right? And it also can be identified in some sort of imbalance when we look at flags. But in this case, it's too intricate to see another structure within this. But sometimes you can see some form of imbalance within the flag. So in this case, you can even consider this a small bear flag before we started heading down. And flags are what it is, right? It's just an indecision between buyers and sellers. And in this case, we see, because there are 3 long top wicks here, you can see that the sellers are prevailing, increase in selling volume as well. So you know that sellers are dominant in this flag, and we should see some sort of follow through. So that's quite straightforward right here. Now you're going to need practice for this, and that's just the basic principles behind it. So when you take trades like this, always remember you're looking out for structure. Now structure, once again, identifies your clear stop loss. So if you have a clear stop loss, where would you want to take your trade? You take your trade as near to the stop loss as possible, and that's where the resistance level is. And secondly, you're able to identify your profit targets, and this is why we identify structure. Where's your profit target in this case? You know that this is the last known lowest price of buyers. You know that buyers, this is the last known price. So you expect that anything underneath this level, there's going to be more buyers that you cannot anticipate. It's a possibility. So this level here must be my first profit target. Must be. I must take first profits here to protect my trade, just in case there are more buyers here that I am not aware of, right? Because of this structure here that's going to push me up. Now, you have to be careful if you're using level 2 data as well. I understand you can check level 2 data here. You can say, I can check level 2 data, whether there is going to be buyers at this level. Yes, but don't forget, these are all just queued orders. The buyers don't mind preparing for this, but once they see big selling pressure coming in, they're going to take out their orders because they know they are going to lose the battle. So you must be careful when you're taking a look at level 2 data and know how to interpret it. So in this case, once you identify structure, your trade becomes easy because you have a clear stop loss. And in this case, if it doesn't work, it works against you, you know that this structure will be broken once we break this 402.77, except for a stop hunt. So you have a high chance, maybe 85% chance that this trade is going to work. That's only if you identify a structure, right? You know that there are going to be structural imbalances here because of this ascending wedge, and therefore you are going to see that structural imbalance balance itself out. Now, when it balances itself out, you know that there is going to be a first profit target here, and you want to see whether the sellers will continue to follow up. So as expected here, we see some flagging at this last known price that the buyers are willing to buy at a higher volume. And there is some flagging here, but we see that there are long top wicks as well. So you're actually quite confident that it's going to push down. So when this happens, it's quite straightforward from here. So anyway, this is just a stock image I pulled out from Shutterstock just for illustration's sake. But when you see patterns like this, now this just means that there are some sort of imbalance, and you can tell where the chart is going to move just because there is some form of imbalance. Now, of course, what's missing here is volume, which is also really important. You need to take a look at volume apart from chart patterns like that. But otherwise, it's quite straightforward. When you see a chart pattern, you're actually looking out for, once again, imbalance. When you see this, you can form some sort of structure. And why structure is so important? Because you can be able to see your stop loss, you can be able to find your profit targets, and you're able to, in a way, predict where the chart may be moving and how much. So once you have clear structure, you wait for a good entry near to your stop loss. You take your decisive profits to protect your trade when it reached the first part of the structure balancing itself, and you see whether there will be a follow-up structure. So there could be another mini structure within the structure itself. And in this case, you see that there are very strong top wicks here. You see that sellers are dominant, increased selling volume. So you know that sellers are going to follow up. So that's great. You can keep your trade alive in this case if you took puts. So once you're able to practice enough, you are able to identify all these imbalances. And that's what we do in the Discord server, right? We just identify all the imbalances here. And once you're able to do that, you can always log in, look at the charts, and know when you're going to enter, take your profits, call it a day. Now you just need 2 to 3 good trades in a day, and that's it. You can call it a day, make a few $1,000, few $100 if you want, as long as you can break the code of where the charts are going to move. Once you're able to see where the charts are going to move, you just need half a point, 1 point. This is enough for you to take enough profits for the day. Right, so learn this skill. This is really, really important. I'm going to teach more of this in the Discord server. So thank you very much for watching, and I will see you in the next video.